The stock market has made history again. The S&P 500 and Nasdaq closed at fresh record highs. But the big question is this rally gonna continue or is a pullback coming? Hello and welcome back to the channel. Today I'm here with a big announcement. The S&P 500 and Nasdaq both have hit fresh record highs. Yes, you heard it right. The market is climbing, but investors are asking the big question. Is this rally gonna continue or is it time to be cautious? So in this video, we'll break down why the stock market is rising, what's fueling the S&P 500 and Nasdaq, is this growth sustainable or at risk, and finally, what should smart investors do in times like these? We'll keep it very simple and easy to understand so that by the end of this video, you have a clear idea of what's going on and how to handle it like a pro. So without further ado, let's get right into it. The stock market doesn't just go up for no reason. When both S&P 500 and Nasdaq reach all-time highs, it usually means that the investors feel confident about the future. In 2025, there are several reasons behind this rally, and all of them are connected. So let's break them down into more detail. The rise of artificial intelligence is one of the biggest drivers of today's market. Big tech companies like Apple, Microsoft, and Amazon are leading the way thanks to their AI innovations. Investors also see AI as the future, much like internet boom years ago. These companies are growing fast, and because they make up a large part of both S&P 500 and Nasdaq, their growth lifts up the entire market. Many companies are making more money than expected, and these strong earning reports give investors more confidence that the businesses are still doing well. When the companies show stable and long-term profits, their stock prices go up. And when a lot of companies report good results at the same time, the entire market moves higher too. Another reason is that investors are expecting the Federal Reserve to lower interest rates. And lower interest rates makes it easier and cheaper for companies to borrow and grow, which makes the stocks more attractive as compared to saving accounts or bonds. Even the possibility of a rate cut can push the stock prices higher, and that's exactly what's happening right now. Despite the past fears of a recession, the economy is still holding up well. People are still spending money, the unemployment is low, and the inflation has slowed down. When the economy is steady, it helps companies grow, which further helps the market moving in a positive direction. Investors from around the world are putting their money in US stocks because they think American companies, especially in tech, are more strong and reliable. This extra demand adds fuel to the market's rise, pushing the prices even higher. One last detail. Many international investors are buying into the US stock market, but why? What is the big reason behind it? Well, the reason is pretty obvious. US has some of the most strongest and most profitable businesses and companies in the whole world, especially in tech sector. With so much uncertainty in the whole world, global investors see US as a safer bet. This inflow of international money has added extra fuel to this rally, especially in indexes like the S&P 500 and Nasdaq, which includes well-known large global companies. Now for the big question, can this market rally keep going, or are we reaching the top? It's hard to know for sure, but let's look at both sides. If interest rates are cut soon, it could push stock prices even higher. Tech and AI companies are showing no signs of slowing down. If they continue to grow, the Nasdaq will keep gaining. And if the economy stays strong with low unemployment and steady consumer spending, the market has a solid base to grow from. Plus, more people are investing than ever, especially through ETFs and retirement accounts. That constant demand helps support higher prices. At the same time, there are reasons to be careful. Stock prices are now very high, and in some cases, too high. If earnings don't grow fast enough to match, we could see a pullback. Some analysts believe the market is getting ahead of itself, that it's pricing in too much good news too quickly. Another risk in inflation. If prices go back up again, the FED might delay interest rate cuts, which could disappoint investors. Also, remember that markets don't go up in a straight line. Even in a strong year, there can be dips, corrections, or temporary declines. So yes, the rally could continue, but it's smart to expect some bumps along the way. So what's the right move if you're investing in this market? Let's have a look. First, you need to stay calm. Don't make big decisions based on news headlines. Just because the market is at a high doesn't mean it will crash tomorrow. It also doesn't mean you should suddenly throw all your money into stocks. Here's a better plan. Stick to a balanced portfolio. That means having a mix of investments and not just tech stocks. Yes, AI is exciting, but don't put all your eggs in one basket. If you've already invested and made profits, consider rebalancing. That means taking some gains from stocks that have grown a lot and moving them to safer areas like bonds or dividend ETFs. If you're just starting, you don't have to wait for a dip. You can use a method called dollar cost averaging, where you invest a fixed amount regularly, like every month. This helps reduce the risk of buying at a high point. Also, keep some cash aside. That way, if the market does dip, you have money ready to buy at lower prices. And finally, focus on the long term. The people who make the most in the market are usually those who stay invested, even through ups and downs. Remember, time in the market beats trying to time the market. The stock market is always changing, and right now, it's definitely at a high. Thanks to strong earnings, tech growth, and hopes for lower rates. But could it keep climbing? Yes. Could it take a dip? Also yes. But if you stay informed, stick to a plan, and avoid emotional decisions, you'll be in a much better position than most people. Whether it's your first year investing or 10th, these moments are really exciting, and they keep telling you that smart investing is all about patience, planning, and perspective. So don't panic, don't chase, and don't stop learning. That's it for today. I hope you found this video helpful, and if you do, make sure to leave a big thumbs up under this video and subscribe to my channel for more financial insights. Until next time, take care.